Have you ever wondered how money, that simple piece of paper or metal, holds such significance in our lives? It's interesting, isn't it? The power that these tokens have to shape our lives and the world around us. But the real magic isn't in the money itself, it's in the systems that move it around. You see, every time we earn, spend, save, or invest, we're interacting with a vast, complex network known as the financial markets. These markets are like the highways of commerce, directing the flow of funds around the globe. They influence everything from the cost of your morning cup of coffee to the interest rate on your home loan. And it's not just big corporations that play a part. As individuals, our financial activities are like raindrops in a storm, each one contributing to the larger current. So every time you use money, remember you're part of a massive global system, the financial market. Financial markets may sound complex, but think of them as a vast global marketplace, a bustling bazaar of sorts where millions of transactions take place every day. Now, instead of fruits, vegetables, or textiles, this marketplace deals with financial instruments. These instruments include stocks, bonds, commodities, and currencies. Just like the local market where you'd buy your groceries, people in these financial markets buy and sell these financial instruments. But how does this work, you may wonder? Well, let's break it down. Imagine you're in a marketplace. You want to buy apples. The price you pay for those apples is determined by supply and demand. If apples are in abundance, the price is likely to be lower. If apples are scarce, the price goes up. This same principle applies to financial markets. When there's a high demand for a particular stock, its price tends to rise. When the demand decreases or there's an oversupply, the price falls. This constant ebb and flow of supply and demand is what sets the price of financial instruments in these markets. Now, why are these financial markets so important? Well, they play a crucial role in our economic system. They allow businesses to raise capital by selling stocks and bonds. They provide governments a platform to finance public projects. They offer individuals and institutions an opportunity to invest, save, and make money. But that's not all. Financial markets also help in price discovery. They reflect the collective wisdom of millions of investors worldwide. The prices of financial instruments in these markets indicate what the world thinks about the future prospects of companies, economies, and even entire countries. So, to put it simply, financial markets are like the heartbeat of the global economy. They facilitate the flow of funds, help determine prices, and reflect the overall economic health of nations. Just as a market determines the price of apples or shoes, financial markets determine the price of financial instruments. So, we know what financial markets are, but why are they so important? Well, let's dive right in and explore the fascinating world of financial markets and their role in our economy. The first thing that comes to mind when we think about financial markets is savings and investment. It's like a dance, really. On one side, you have individuals and businesses with excess funds looking for a place to grow their wealth. On the other side, you have firms and governments in need of funds to finance their projects or operations. Financial markets act as the dance floor, where these two groups can meet and trade securities, such as stocks and bonds. Now imagine you're a business owner. You need funds to expand your operations, but taking a loan from the bank would mean high interest rates, right? Well, financial markets offer a solution. They provide a platform where businesses can raise capital by issuing securities. Investors, in turn, buy these securities, providing the needed funds. It's a win-win situation. Investors get a return on their investment, and businesses get the funds they need at a potentially lower cost than a bank loan. But financial markets are not just about savings and investment. They also play a critical role in risk management. How so? Let's think about derivatives, like options and futures. These financial instruments allow investors to hedge against potential losses, providing a safety net in volatile market conditions. So, financial markets essentially act as a buffer, softening the blow of economic uncertainties. And then there's the role of financial markets in promoting economic efficiency. By allocating funds where they are most needed, these markets ensure that resources are used in the most productive way possible. They do this through a mechanism known as price discovery. This is where the prices of securities are determined based on supply and demand. High demand for a company's stocks, for example, indicates that the company is performing well and thus attracts more investors. This process aids in the efficient allocation of resources, promoting economic growth, Moreover, financial markets foster growth in another way. They make it possible for governments to raise money for public projects. When a government issues bonds, investors who buy these bonds are essentially lending money to the government. This money can be used to build roads, schools, hospitals, infrastructure that's vital for economic development. In essence, financial markets are the lifeblood of the economy, facilitating the flow of funds and enabling growth. They are the unseen force that drives economic activity, shaping our lives in ways we often take for granted. So, the next time you think about financial markets, remember, they're not just about Wall Street and stock exchanges. They're about growth, efficiency, and the prosperity of nations. You might be thinking, I'm not an investor, so how does this affect me? Well, let's dive into that question. Financial markets might seem like a distant concept, reserved only for Wall Street whizzes or those with an economics degree. But in truth, they're closer to home than you might realize. Consider your mortgage. Whether you're a homeowner or aspiring to be one, the interest rate on your mortgage is deeply influenced by the financial markets. When these markets are buzzing with confidence, investors are willing to take risks. This can result in lower interest rates for loans, including your mortgage. On the flip side, when markets are shaky, investors seek safety. Consequently, interest rates may rise, increasing the cost of your mortgage. Now let's talk about retirement. Most of us dream of a comfortable retirement, and financial markets play a crucial role in making that dream a reality. If you contribute to a pension fund or retirement savings plan, those funds are invested in the financial markets. The performance of these investments can significantly impact the size of your nest egg when you're ready to retire. Or think about your daily cup of joe. Coffee companies, like many businesses, are often publicly traded in financial markets. The performance of these markets can influence a company's ability to expand, invest in new products, or even just keep prices stable. So, the cost of your morning caffeine fix can be traced back in part to the financial markets. But it's not all about money. Financial markets also affect employment opportunities. When markets are thriving, companies tend to hire more, creating jobs and contributing to economic growth. Conversely, a struggling market can lead to job cuts and economic slowdown. So, while you may not directly trade in financial markets, they impact your life in more ways than you might realize. Whether it's the cost of your mortgage, the size of your retirement fund, the price of your morning coffee, or even your job prospects, financial markets play a pivotal role in shaping our everyday lives. Let's take a step back and see what we've learned today. We started our journey by contemplating the vast, intricate world of financial markets. These markets, though often invisible in our daily lives, shape the contours of our economy and personal finances. We discovered that financial markets, at their core, are simple mechanisms. They are platforms where buyers and sellers come together to trade assets like stocks, bonds, currencies, and commodities. They set the prices for these assets, influencing the cost of everything from your morning coffee to your retirement fund. Next, we dove deeper into the essential role of these markets. They facilitate the flow of funds from those who have surplus money to those who need it. This role is vital, enabling businesses to grow, governments to function, and individuals to achieve their financial goals. We also touched on the various types of financial markets: primary and secondary, public and private, spot and futures, to name a few. Each serves a unique purpose, catering to different needs and preferences of participants. Then we brought it all home by exploring how these markets impact our everyday life. Whether it's your savings account earning interest, your mortgage loan, or even the price of your favorite fruit at the local market, all these are influenced by the invisible hand of financial markets. But our journey doesn't end here. The world of finance and economics is vast and ever evolving. There's always more to learn, more to explore. So I encourage you to keep feeding your curiosity, keep asking questions, keep seeking answers. In conclusion, financial markets play a pivotal role in our global economy and in our individual lives. They are the invisible strings that connect all economic activities, creating a symphony of growth, prosperity, and opportunity. So remember, the next time you spend or save, you're participating in the global financial market, a system that's as fascinating as it is complex.